Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I want to share with you guys 5 high quality businesses that pay dividends. They have excellent businesses, they've got wide moat, and I'm going to go over the financials of these businesses as brief as I possibly can. And of course, as always, do your own research to make sure that you understand how these companies make money, if they're profitable, if their current valuation is actually reasonable, because that's what we're interested in. The end of the day, we do not want to buy stocks when they're trading really higher multiples, and we can't compare. Normally people look at just PE on its own or PEG ratios and so on. You cannot look at these things on their own. You kind of need to compare the current PE of a stock, maybe compare it with the 5-year average and see where the company has been. Don't look at that just PE ratio in comparison with the sector. Okay, things that can be slightly different. High growth companies don't normally tend to have a higher multiples because people are paying it slightly more because they will know that they can, they will receive that high returns and so on. So always do your research. Always try to understand and learn what these things are. I'm just going to kind of give you some information, basic information on these companies. And as always, please do your research. As you can see here, this is my actual portfolio. This is trading 212. They made some changes and I'm not sure how I feel about it. They've now removed these the stocks coming up on this side, but now it's on the right side. I think it should have been there from day one, but because I'm used to it, it just feels slightly weird. But there we go. That's the overall portfolio right now. You can see it there as well. We've got an over 17% in terms of unrealized returns. So this is money that we have if we sell today that we will receive. It's not realized yet until we sell it. I'm not planning to sell it anytime soon. The other bit that I find really interesting is this overview thing. This overview includes return. It says return. It says 21,000, almost to 400, and it says here total value, which is basically what the portfolio is, and return, it says the total profit or loss from your current and past investment including dividends. I don't think that's calculated correctly. I'm going to double check that. I haven't investigated a little bit more, and I've basically sorted all the companies that I own in the weight. Basically they are normal, so this is the most money that I've got in terms of money wise. Okay, so it's money weighted if you like. So I've got 6,800 in Broadcom, and then 6,300, and then so on. So what I'm going to do now is I'm going to share with you guys these 5 companies. But before we do that, there are a couple of things I want to mention very quickly, and that is the Fear and Greed Index. This kind of gives us an idea of where the sentiment is in terms of in terms of the investors, if you like. So right now there's a bit of a greed going on, so we're really in extreme greed, I feel. So just be mindful of that. People are jumping into stocks that might not be, if a couple of months from now on, if the stock market tanks, they will not be buying. And this is the thing that I've always said to people: if you're buying these companies that basically wildly expensive, if they go down 20-30%, would you still hold and would you still buy? If your answer is no, then what the heck are we doing? What was the point of this? So ideally, you're meant to be buying these companies when they're extremely cheap. And I'm going to talk about one company today that I feel like is becoming that for me. Okay, so just be mindful of that. And now in terms of where we are year to date, if the markets were close today, and we are already mid-October now, we've got November and December, 2 more months, and the S&P 500 is right now returning 23%, which is absolutely amazing. The Dow Jones 14-15%, the Nasdaq over 23%, 22%, and the FTSE 100 8%, which is quite decent for FTSE 100 because it never does anything over the last 10 years. And as you can see, for the 1 month we are still up, so things are fine. Things are heading in the right direction. But 2 things that are coming up is, one, the US election, so that brings a lot of uncertainty, and on top of that we have the reports. So a lot of the companies are reporting their earnings basically this week, next week, and the following weeks. And that gives us a chance as investors to actually find high quality businesses at the discounted prices. And I've always said this to you guys, this is where I put a lot more money into the market, because the lot of companies come back down. Now I will be doing that next week, because there's one company that has come down quite a bit. I'll talk about that in a second. But the ones that we own, the ones that we're really interested are that will be reporting next week. This company is here. So we're talking about Lamb Research. I don't own it. I'm currently looking at it. ServiceNow is another company that I've always been interested in. But the ones that I actually own is the UPS and Union Pacific. And I'm really interested in Tractor Supply. So we'll see what happens with that one. So there are a lot of companies reporting in the next few weeks. So you might see a dip in the market. And again, when something like this happens, if Tesla reports, it might take down another 2-3 basic, that might take down entire sector, if you like, you know. So you have to be mindful. Lamb Research basically comes out and says something horrible, then I think the entire KLA and everyone else in that sector will also be coming down. So it will be interesting to see and watch what happens with that side of things. Right, let's now get started with the video. And as always, like I said to you guys, like the fluctuation of prices of the stocks individual, like quarterly, it's not really important. What is important is that you have a plan for your portfolio. Every single year you can see your money growing. And the only thing I always say to people is do not lose money. Of course it happens, but try not to as much as you can. And if it happens, it happens, but try not to. And keep being consistently invest in the stock market and buy high quality businesses at discounted prices. I made some small changes to this thing here. The template that I use, the EPS estimate is for next year, and the revenue growth that I've included now. So the revenue estimate and the EPS are now side by side. So we want to see if the EPS is growing next year, what basically the expectation is, and then also the revenue. So those, I just made it just 1 year because it's probably easier to keep an eye on rather than next 5-year average. Because one thing I've realized, the 5-year average, it never happens. Stuff happens in between, and then things slightly change. So just focus on next year and then focus on the following year from there onwards. So the first company we're going to look at today is Automatic Data Processing. Is one I own in my portfolio, 119 billion market cap. The company has a wide economic moat, and when it comes to the dividend side of things, this is where this company shines. Absolutely amazing in terms of latest increase, the 5-year growth rate, 50 years of increasing. So it is a dividend king, the company that has been paying their dividend over the last 50 years and so on. Annually you get $5.60. Safety is 97%. The 5-year revenue compound annual growth rate is 6% and EPS 13%, which is absolutely great. Profit margin, return on equity, return on investor capital, absolutely one of the best out there. Free cash flow, $3.5 billion. Free cash flow are very important. They use that money, companies use that money to pay off debt. They pay as dividends. They buy back their own shares. They acquire other businesses. So there are a lot of things they could do with that money. And it's important the companies that we invest in do have some excellent free cash flow, because that's the way the company basically that means it's very profitable business. There's money lying around after they paid their taxes, after they basically make some everything else. What's left is basically this money that they can say, okay, do you know what, let's give some to the shareholders in terms of dividend side of things. Okay, we might increase that dividend for 12%. We might buy back a couple of billion of shares over our stock and so on. And then your own individual shares is now worth more. So free cash flow is very important, and you kind of need to keep an eye on the last 5 years where it's been. If it's a declining, it can be a bit worrying. Okay, but sometimes companies go through little bit of a wobble here and there, so you need to take that into consideration. This is why I've always said to you guys, doing investing, it's not just a clear cut. People comment on the video saying it's not one fit, one shoe fits everything. It's not one size fits, or whatever the saying is, right? There's so many moving parts to each company, and sometimes we look at free cash flow, sometimes we might just focus on the payout ratio for a company, sometimes whatever the case might be, there are different things we can look at. Total return in the last 10 years, we're looking at about 16%. EPS, we're looking at 9% for the next year, so that's 20. Some companies have already gone into 2025, so I just said next year rather than saying 2025, because some companies have already started, like I said, their physical years. So 2025 or next year, basically we're expecting 9%, and then 5 in terms of revenue, about 5% in terms of EPS, and 9%. Fairly value right now, $280 per share is where they think the price should be. Now, if we look at the valuations and we look at the comparison with the last 5 years, this seems slightly more expensive. So if you look at the last 5 years, it's been about 30 PE. Right now we're looking at about 31 if we look at non-GAAP, and if we look at GAAP as well, it's 32, and basically we're looking at the 30 when it comes to average. So it seems a little bit overvalued in my opinion right now. But if we look at things like Wall Street, they're saying it's a hold right now, and I kind of agree with them, because right now it seems a little bit more expensive than it has been. So it's about 5% downside from where they think it should be. $278 per share is basically where they think the price should be. So that's the first company we're going to talk about today. If you have not liked the videos yet, please do so, because it makes huge difference to the channel. Okay, the other thing that will make me happy and very, in terms of helping us with paying for subscriptions and everything else, is joining us at the Discord. If you join us at Discord and you're paying that £5 or $5 a month, you get access to all the buys and sells for the family portfolio, for my own portfolio. You get exclusive Patreon only high quality stock picks, which I update every month. We've got the monthly undervalued stock suggestions. You've got the Discord where a lot of brothers and sisters are sharing very good practices, and then there are other things, inshallah. So if you can do that, that would be absolutely amazing. Right, so the next company is ASML. I bet a lot of you have been waiting for me to talk about this company. I have had this company in the portfolio for a very long time. Right now, it has come down quite a bit. As you can see here, the stock is down almost 16% in the last 5 days. And that's correct, the last 5 days, not last 5 months. And a lot of it, I genuinely, in my opinion, in my humble opinion, I think is overreaction from Wall Street. They set their expectations, certain things they want to see, and that did not happen. And for that reason, it actually has come down quite a bit. Okay, so 14% on the day when this was reported, and these are some of the reasons. First of all, they talked about the fact that China is no longer their main priority. And I think China, because of the US pressure, I don't think moving forward, this company's revenue will be reliant on China as much. The USA is pressuring a lot of these semiconductor companies to not basically supply to China. And for that reason, that's one of the reasons why we've seen the revenue in China slightly declining. Now, in terms of third quarter bookings, okay, it has fell 53% quarter over quarter. Now, this genuinely, in my opinion, okay, so the estimates were 5.3, let's call it 5.4 billion euros. Okay, so it has come down 2.6. So that's basically one of the major reasons. Plus, what's happening in China, the net sales grew about 20% quarter over quarter to 7.47 billion euros, beating the estimate, which was 7.17. So in terms, and the net income jumped to 32% quarter over quarter to 2.08 billion euros, surprising basically the estimates that they were expecting. Now the outlook is basically where things slightly not great. Sorry, I mean great. And the reason is because look at the net sales. Okay, so the fourth quarter net sales to be between 8.8 to 9.2 billion, with the midpoint of 9 billion base slightly above the consensus, which was basically almost 8 let's call it 9. Okay, so the company sees gross margin in the range of 49 to 50%. Where do you get that from? Genuinely, it's ridiculously amazing to a company to be doing this kind of thing. Estimates were 50. Okay, right. Whether it is 50.5 or 49, it makes no difference to my life. Genuinely. Okay, for the full year, ASML expected net sales of $28 billion versus the estimates of $27.7 billion. So again, full year intact. Nothing is going wrong with the company. For the year 2025, ASML is lowered the net sales forecast 30 billion to 35 billion, basically, which midpoint was about $32.5 billion. Previously, the company expected 30 to 40 billion, so about 5 billion less than. So the estimate is about that much. Now, genuinely, so if they had said before we expect 40 and things slightly change, and then all of a sudden the whole world is about to end. And this is why I just don't like Wall Street. This is genuinely one of the reasons why you need to be careful when you're investing in the stock market. Do not listen to the noise and use these opportunities, okay? So a company basically to actually buy high quality businesses. In December of 2025, the company is expected 29% in terms of year-over-year growth. That's year over year. So the previous, you compare it with previous year, they expected almost a 30% growth when it comes to EPS, which is absolutely amazing. Again, that's a profitable business in my opinion, right? Revenue side of things, they're expecting about 16%. Again, absolutely amazing. Nothing to worry about. Things are absolutely fine. Right now, this is a very cyclical business. As we know, we've talked about the semis being very cyclical businesses, okay? And it will continue to be a cyclical because when the markets, right now there's a demand for a few things, okay? So with AI and everything else and the Internet of Things and how technology has completely changed over the last whatever years, I think this company will benefit a lot. And a lot of the EUVs, technologies will be required by companies like Intel and Taiwan Semiconductors and so on. So despite regulatory headwinds and reduced Chinese revenue side of things, I genuinely think basically ASML has a strong fundamentals and we will continue to do really well simply because of the high demand from AI markets and is strong. And I genuinely think it's a strong buy right now, in my opinion. What am I doing moving forward? I will be buying, InshaAllah. Starting next week, I will be adding to what I have already, which I will tell you at the end of the video. So as you can see right now, basically the same is about 23% discounted right now. So I'm going to continue buying, InshaAllah. So I've got 5 shares, I think, and I will let you know exactly when I add to. Next company I want to talk about today is MSCI, another company that I have in this portfolio. 48 billion market cap. It has wide economic moat. Right now it has $608 per share. Dividend is absolutely amazing. The growth of it is really great. They've actually increased that for the last 9 years. Annually you get $6.40. Safety is perfect, spot on, safe right now. The 5-year in terms of revenue, in terms of EPS, really good. Profit margin and return on invested capital, really good. Free cash flow right now $1.2 billion. For the last 5 years, that's basically compounding about 18%, which is really good. Total return the last 10 years about like 31%, which is absolutely huge. 14% when it comes to the EPS estimate for next year, and then EPS revenue side of it about 10%, which is really nice. Fairly valued right now, $520 per share is where they think the price should be. The next one we're looking at today is Visa. In fact, I'm going to check the next two together because they are almost the same family, Visa and MasterCard. And before I actually talk about these companies, they are definitely Sharia compliant companies because they do provide the technology that is used in the credit cards. They do not have anything to do with this, basically the riba side of things. They are transaction business, so they make sure if you send in money from your account to basically the person that you're buying products from, they facilitate for that transaction, make sure it gets there. They don't care what is in the transaction, whether you've actually taken loan or basically buying what, they don't really care. They make sure your transaction leaves from your account to the person who's selling the product. That's all they do. So I hope that clears things up. All 5 companies have a wide economic moat. As you can see, Visa and MasterCard, in terms of dividend, they're absolutely wonderful, but the yield's quite low. Now, I'm not buying them because of the yield. I'll leave them alone for now, but you get $2 basically from each one of them, which is fine. The safety is absolutely amazing. In terms of growth in the last 5 years for revenue side of things and EPS, very identical. And in terms of profit margin, return on equity and return on invested capital, there are not that many companies better than these two, I promise you. Now, free cash flow, absolutely amazing. Total return in the last 10 years, really good, both of them. And then expected to grow almost a similar kind of situation. So EPS about 12%. This one EPS about 16%. And then when it comes to revenue, so it looks like MasterCard is basically expected to grow slightly higher. And revenue for MasterCard is about 12. Both of them fairly valued right now, $272 per share and $465 per share. So like I said to you guys, I do own all of these companies. So I'm going to quickly show you the first one I'm going to show you today is automatic data processing. Okay, £5,600 in that one. And then an MSCI, £4,600. I've been buying this heavily quite some time ago, but since then I felt like it's become overvalued. The other one is Visa. There we go. MasterCard as well is there. And then finally ASML, which is now about 2.5% of my entire portfolio. I will be 9% up still, despite this massive drop. I will be buying more. I will share that with you guys inshallah in the next couple of days. But please be mindful of what you hear on the news. If a company that you own in the portfolio and you bought it for a reason in the first place, okay, you bought it because you like the business and you know where it's heading, you've done your research, stay on the course. Like, don't just let these people get to you. If it's down 20%, that's a great opportunity for you to add to that company. If, I don't know, UNP tomorrow goes down 15%, am I going to sell it? Not really. If I see for companies like ServiceNow and it's gone down 20-30% and I actually like the business and I know where it's heading, I will add to the basic portfolio, inshallah. So we'll see what happens. But please be mindful of what the noise out there, and people in the YouTube world and everything else. Just think about yourself and what you want to do. If you want to create a generational wealth for you and your family, stop listening to the noise and focus on yourself and your family, inshallah. Have a wonderful day. Assalamu Alaikum.